Hello, my name is Edward, aka Daily Crypto. In this video, we're going to talk about charting market structure. Generally speaking, we're going to want to use the daily time frame to chart a trading structure. Now, that's not to neglect multiple time frame analysis. We talk about that in another video. For the purpose of this video and to understand the concept of charting market structure, we're going to be using the daily time frame. We're going to be looking to identify areas of support and resistance. We're going to be looking for wedges as well. We're also going to try to identify any active and valid trends. We're also going to try and form an opinion on price action here first before using indicators. So I've already got some of this stuff taken care of for us. I'm going to go ahead and show you what this chart looks like without these things. So now this is what we'd be looking at before we had any technical analysis done. This is probably what your Bitcoin chart looks like if you're new to Bitcoin and cryptocurrency. Now first we're going to start by turning on my support and resistance zones, and we're going to look at wedges. So here you can see now the chart with some support and resistance zones, as well as a wedge being shown with valid and active trend lines. So we're going to go ahead and take a look at some of these things and identify what they are. Support is an area that price fails to break below several times. So we have this support zone start up here, and this is a pretty wide support range, looking about 10% support zone here, where it starts and fails to break below. So as you can see, price is supported here by buyers. That's where we get the term support from. Buyers step in to support the price from falling any lower, causing the price to rise. You can see this happens again over here in this area, ultimately before the next run up. So here we have an area of resistance. Price fails to break above. So we can generally use that across the board now. We see where price fails to break above again in a few touches. Here again at the top, which was the recent previous high when Bitcoin was in price discovery mode. So we can confirm that this is a support resistance flip, right? Because price is being used resistance here, then support here. Generally speaking, when resistance is flipped, it becomes support, and vice versa. If support is broken, it's flipped and becomes resistance. If this were to happen and price breaks below this support zone, possible we could see a retest in the future that would be used here as resistance. Maybe do something like this, use more resistance here before breaking above, something of that nature. But generally speaking, if support can hold a previous resistance flip, it can be considered a safe buying opportunity. So here in this example, we are looking at Bitcoin coming to a recent support resistance flip zone. As we saw again, the first time it was used as support was right here for a few candlesticks, really only the first test. So buying here could present a good opportunity for a rebound in price action, but it's also possible that this support zone is broken. Up here we have an obvious resistance zone starting with a new all-time high peak back when Bitcoin was creating new all-time highs, ranging into this area. We have resist twice in this area, so we go ahead and project from the bottom of that, and we use the top of this as this was the actual new and latest all-time high from Bitcoin. You can extend that range up if you'd like to. However, it's just a very vicious range, which is why we're trying to really avoid having a large area in a support or resistance zone. I'd like to tighten this up a bit, maybe to right here, but we have seen resistance at this level a few times, so it was important to accommodate for that in this zone. Now we have a possible area of resistance support. This happened again. If I can draw another box to show you. So here's the exact same thing. Resistance, a little bit of support right here after a flag, small support, and then possibly was going to be used as resistance, but was actually could elongate this now to extend the zone. But again, I try to minimize them as much as possible, and that was my original projection based off of these values, so I was just going to go ahead and leave that how it was. So now that we can see support and resistance, we're going to look for some wedges. Here we can see a wedge. So this was an active uptrend line projected from two lows in price action, right? So we have these two lows in price action where the line starts. So we have this projection here based off this low and this low, ranging through that wick and touching that wick. And as you can see, price respects the projection pretty well at some point. When price was ranging up all this high and everyone was getting into Bitcoin, it was very exciting, yes. And it had just broke the new all-time high. So you can see a little baby wedge here if I put this on. So So that would have been a really great range to trade if you had this resistance zone, because that was previous all-time high based off of other values back in 2017. That was actually a valid resistance point. Let me show you another chart. So see, that was the same wedge we were just looking at right there based off of this value. So now I'm just going to go back to our lesson. So here we see that wedge break and price shoot up, and you can create a wedge by connecting these two valid downtrend points and projecting them out. I like to color code mine. And then projecting a downtrend line by using the lower highs, in this case here. I like to color these red. So here we are projecting a downtrend based off of these lower highs being formed. If there was a higher high being formed like this or like this, it would change the slope. So this higher high changes the slope, right? Now, that's not a trait of a downtrend, so we can see here it's more reasonable to try and find long opportunities in this moment, as this is not a characteristic of a downtrend. This is a characteristic of a downtrend. Same thing for here. This is a characteristic of an uptrend. However, a series of lower lows is characteristic of a downtrend. A series of higher lows is a characteristic of an uptrend. Higher lows, higher lows, higher lows. This is a higher low, higher low, higher low. This is a low point, there's a low point. They're all higher lows. Then we start running into some lower lows. And that's a characteristic of a downtrend. However, it forms a wedge running into this previous uptrend. So that's what I mean by looking out for a wedge. So now that we've identified a wedge, we could see here a lower high in overall price action being formed, and price has broken above. This previous resistance could now possibly be used as support, although it has fallen beneath, which is not a great sign. It does run into a previously projected uptrend line. So this uptrend line has actually been invalidated now, as this candlestick has closed below it. This one was not invalidated as price closed above it. Now the price is closed below it. We're looking to use this uptrend line as support. So this is a valid and active uptrend line. This is a valid downtrend line. It's not active anymore, as we're not actively using it as resistance. This is active because we could possibly use it as support right here. This is not an active downtrend line because it has been breached. Before price broke it and closed above it, here you can see price is trying to break above but cannot get a candlestick to close above that, and actually jumps back down, still was valid. Now that it's been broken, it's technically inactive. Still a valid downtrend line. We could look to use it as support in the future, but as far as a downtrend line goes, this one is invalidated. Now we would have to draw a new line, as there is currently a new active downtrend. So this is the active downtrend line we are playing now, and we have a larger wedge. So this is how you identify areas of support and resistance and wedges on the daily time frame. Now you can certainly get into other time frames to do this. However, I think it's generally a good idea to start on the daily time frame if the purpose of your analysis is to get into day trading. If you're looking at the weekly or monthly time frames, there's certainly a lot of valuable information there. However, that pertains more to long-term projections and long-term hypothesis. So if you're trying to use the weekly or monthly time frames to analyze for day trading setups where you're going to be in and out within hours or maybe a day or two, you're not doing yourself a lot of justice, as there's a lot of things happening on the smaller time frame. So try to start at the daily time frame if you're going to be looking at this to be trading. If you're going to be looking at Bitcoin or any asset to be trading, you'll probably be looking at the daily time frame to make use as the larger time frame. And then again, we talk about multiple time frame analysis more extensively in another video, so check that video out as well. But when you actually get into your trading, you'll see that you're looking at smaller time frames, like maybe the 4 hour, 1 hour, possibly 15 minutes or less, to find the best entries and exits. So now that we've looked at the daily time frame and charted the market structure, we want to form an opinion. We can see price coming off of this valid downtrend and going to intersect with this uptrend, as well as this area of support. So support can be found in here and not sustained below. Here we can see price dip through but did not close below. So it's possible we could be looking at that scenario again here, but we do have an area of conflict right here. So something is going to happen here. Price is going to break up and respect this uptrend line, or price is going to break down and respect this downtrend line. One of the two will happen here. The downtrend line and the uptrend line cannot both be respected here. Just technically it's not sustainable. Here we see a lot of downtrend action and even lower lows being formed, constituting our downtrend, a valid downtrend, but it's running into this uptrend. So as we've known and looked in previous examples, wedges get broken and they either break up or down in one direction. So here we're coming into that scenario again, and we will see an upwards break or a downwards break. So again, after you chart your market structure, you have to form your opinion before you start looking at indicators, and then you can use the indicators to confirm or deny your ideas. And we're going to review using indicators as confirmations in the next video. So look out for that video. I hope this video was helpful, and thanks for watching.